Bloomberg Audio Studios. Podcasts, radio, news.
Welcome to the Daybreak Asia podcast. I'm Doug Krisner. In the States, risk assets were sold down with big cap tech and cryptocurrencies bearing the brunt of the selling. Now, that drop came after a number of Wall Street executives warned of a pullback in the equity market. At the same time, the hedge fund manager Michael Burry placed a $1.1 billion bet against leading artificial intelligence-related stocks. For more on the market action, we caught up with Anew. She is Cross-Asset Investment Specialist at VanEck. Wu spoke with Bloomberg TV host Avril and Shery on.
Anna, great to have you with us as we get the Asian session started. We had already seen significant pressure over in South Korea, for example, because of the Korea Exchange warning about SK Hynix because of that incredible AI rally. Where are we in Asia when it comes to these valuations of these high-flying tech stocks?
Hello from Sydney and good to see you. I think very much to your point, we had a 5-month rally in AI thematic in the US and across the board. So the bar is simply just getting higher. So now a modest earnings beat does not translate into price reaction anymore. To that point, the similar sentiment, I guess, is flowing into the Asia market as well. After such a rally that we have seen in South Korea, China, arguably in Japan, I think that bar right now is getting higher as well. However, I want to bring your attention to the valuation landscape, right? Even after the broader rally in Asia tech that we have seen so far, it's still valued much lower than the US tech, and which makes it really a value and a growth play in the long term. And if we look at the EPS growth, it's not great, but it's improving sector for the sector quarters after quarter. So I think the long-term story for this sector in Asia is still constructive.
What about not necessarily the direct AI plays, but the indirect ones? Because we know that in order to power artificial intelligence, we'll need energy, for example.
That's a great question. I really love that because exactly. The global AI industry is maturing over the last couple of years. So it's gone from, this idea generation phase, who has the best model, really to an operational intelligence phase where we need to see actual monetization and operational AI ecosystem. And in that sense, the supplementary roles into the AI rally right now are benefiting and also positioned to benefit in the coming quarters as the margin expansion goes in. To your point, energy play is one of the pockets of opportunities that's getting a lot more attention compared to the previous quarters because AI, after the record amount of AI capex, energy and electricity demand in specific, it's rallying to decade high and it's positioned to go 10x by 2030. So that demand gap needs all sorts of energy play. So one of the more prominent play right now is the nuclear. It gives 24/7 clean non-emission play from that part and benefiting the uranium miners as well. And to a certain extent, the other renewable energy sources companies have been growing very fast in the second half of the year. Also look at the valuation side as well. Again, pointing to that growth and value play, they are very attractively valued comparing to the other pockets of AI.
With that in mind, which market do you think will lead the way for the rest of this year and into the first quarter of next year? Is it still going to be perhaps South Korea for the region, especially given how we're seeing a resurgent dollar?
Yeah, okay. I think that question really goes into two parts. I think in terms of markets that is positioned well for towards the end of the year to next year, Korea is one of the more high conviction market because it's got the cleanest growth play right now, and also translating into the latest earnings season. While it's still quite early days, but we can still see that over half of the companies are reporting surprising to the upside. Also, it's got two cleanest play in terms of growth. One is AI. Its strategic position in that high memory chip specialist role in the global AI supply chain is giving it a long-term tailwind and long-term contracts as well, with margin expansion possibilities. But also, it has a very unique role in the global defense sector, and also that has an AI play to it as well. So these two catalysts, I guess, is driving the Korean market to a broader growth play. Outside of that, I think China, even though right now the rally has stalled a little bit, and I think investors are waiting for more pronounced and substantial policy stimulus to pick on that rally again. But also AI sector in that country can still defy gravity as the broader, hardware makers rally and race to fight for the role for China's domestic NVIDIA.
That was Anew, Cross-Asset Investment Specialist at VanEck, speaking to Bloomberg TV host Avril Hong and Shery here on the Daybreak Asia podcast. Welcome back to the Daybreak Asia podcast. I'm Doug Krisner. Economies across Asia are being reshaped by a new reality, or realities plural. We've got higher U.S. tariffs, softer Chinese demand, and the growing impact of artificial intelligence. And in the midst of it all, money moving faster and more securely across borders. Joining me now for a closer look is Sandeep Malhotra. He is Executive VP of Core Payments for the Asia Pacific at Mastercard. Sandeep, thank you so much for making time to chat with me. Lately, I think we can agree on this much. There has been a tremendous amount of focus on the use of artificial intelligence. Give me a sense right now, best you can, on how Mastercard is using AI, especially in the APAC region.
Yeah, well, first of all, thank you for having me on. And, AI is the talk of the town. So if you look at Mastercard, our big focus used to be converting cash to digital. And then over the last, 1 year or so, we are actually taking this to the next level. So taking digital to intelligent. And this is where AI plays a big role, where we are looking at intelligent transactions, just not digital. And we are actually changing our network to be ready for this connected commerce, which is our vision for 2030, driven by AI. So what is AI going to do? We want to make sure that consumers, when they do discovery of the products or search the products on an AI agent, are able to even do a purchase on that without leaving that agent. Sounds very simple, but behind the scenes, it's very complex, right? But what happens if you ordered green pair of socks and red arrive? Who takes care of that? What happens if a fraudulent transaction happens? How do you take care of that? So what we are trying to ensure is that we're trying to create a very safe, secure, and a transparent kind of an environment for these agents to perform the transaction.
I'm wondering now on the degree to which you're collaborating with other software developers over, or whether this is primarily something that is proprietary to the extent that you need to employ a number of software engineers to help facilitate this goal. What's the balance between collaboration and kind of going alone in-house?
It's all collaborative. It's all partnership. It's all based on standards, because you cannot create anything proprietary because it won't scale. And if it doesn't scale, it doesn't matter. So what we're trying to do is we're working with the FIDOs of the world, which is the standard community. We're working with Cloudflare, and I'll tell you what that does. We're working with PayPal. We're working with many other partners to make sure that the transaction happens in a safe, secure fashion. One example is you want to make sure that when the merchant accepts the transaction, that agent is a good agent. How do you do that? And that's where Cloudflare comes into picture, which basically will block an agent which is not a good agent. And that provides, comfort to the merchant who's accepting those transactions.
So in the last week here in the States, we heard from a number of those big hyperscalers on their AI cap spend. And I'm curious about the degree to which you feel, maybe not you personally, but Mastercard as a company feels compelled to lay out vast sums of money in the CapEx realm in order to be ready for this kind of change that you're describing.
Look, I think the hyperscalers are doing what they are best in terms of creating models, in terms of providing the computing data to make sure that that is done. What we are doing is we are basically saying, if you search using that data to find an item you like, we will make sure that that transaction, which is done within that AI interface, whether it's an agent, whether it's some other protocol which the consumer is using, or if the merchant has made a change, we will make that commerce become safe, secure, and intelligent, and give comfort to the consumer without leaving that agent, domain.
Sandeep, I'm curious as to whether there are certain areas of the digital payment space that you're particularly concerned about, perhaps something that you have to almost counter-program against, whether there is a level of risk for your business or the businesses of your customers. What are the areas most concerning to you?
It is a big concern that if you look at just Asia alone, Asia lost about close to $670 billion of money due to fraud in the last year. So 60% of the banks are prioritizing AI-driven fraud prevention and identity verification. So that's a big focus for us. How we're going to do that is we want to make sure that the card numbers which you have don't exist anymore. So whether you save a card on file at like Macy's.com, we're going to replace it with a token. Whether you basically have a Apple Pay transaction, that replaced by a token even today. And then even the cards which are on the physical card, the card numbers, we're going to make them numberless as well. So the big focus is make that tokenized, no more card numbers anywhere on the planet. And that's our goal for 2030. And we must verify the user. We will make sure that you are who you are for every transaction. So fraud is the big risk, but this tokenization and authentication, which is verifying every user for every transaction, that's the next step which we are moving towards and made a big progress around that.
So when you're in conversation with your colleagues at Mastercard, talk to me a little bit about aspirationally what the world in the future looks like when we introduce quantum computing to the payment system.
Yeah. So first, what quantum brings to the table is it brings huge amount of computing in a different fashion. It actually gets into the realm of even, challenging today's cryptography and encryption, which is where the trust is based on. So what we are working on is we've even created a crypto-resistant cryptogram, which means a quantum-resistant cryptogram, which means that even a quantum computer cannot actually decrypt that cryptogram, or when the transaction happens, it actually is very safe in nature. So as the technology advances, you have to also advance in this fraud prevention area because trust is the essence. The day you break the trust of the consumer, they will never transact. And then, we would have a tough time, convincing the consumer to do these transactions. So quantum does make a difference, but we're looking into ways on how do you make sure that these technologies are safe and secure.
To what extent are you using AI to actually help build these platforms, which is to say maybe you're relying on it somewhat as a partner or a co-pilot or a collaborator when your programmers are setting about developing software programs?
So AI is not new for us, right? We've used AI for more than a decade. One in three of our services today leverages AI for insights and protection. And then we have secured about 160 billion transactions annually. And then we have prevented over 20 billion of fraud every year using AI. Now, what's next is around this agent pay, agent commerce. How do you make sure that agent is a good agent? How do you make sure that the user is present or not present when they do the AI transaction? Because you could have an autonomous transaction where the AI agent wakes up and buys a ticket for you when the ticket price is less than $300. And the third thing is the merchant may not be technologically sophisticated or not. how do you make sure that this technologically unsophisticated, merchant is also part of this AI era? So that's what we are working on. Prevent fraud, verify the consumer, make sure the agent is good, and it actually goes down to a consumer who may not be AI sophisticated or a merchant who may not be technologically sophisticated. That's what we are working on by making our network do a lot of heavy lifting and making it more intelligent and more interoperable.
Sandeep, before I let you go, describe for me the current market dynamics in the APAC and your understanding about the growth outlook for consumers and businesses in the region. Is there a degree of optimism here, or given some of the volatility that we have seen not only in markets but economies as well, are you a little maybe cautious?
I believe that Asia is leading in payments. It's not the adopter of payment technology. It's the originator of that. I personally see that the payment innovation is traveling from east to west, where the other innovation might be traveling from west to east. So I'm very optimistic. 70% of the real-time payment transactions happening in Asia, and there are wallets in China, there are Alipay, WeChat Pay, you have Gcash in Philippines. They are just buzzing, driving electronic and digital transactions. What we're doing is we are trying to create interoperability with these other ecosystems. So which means you could be a consumer from the US traveling to China. You can download an Alipay app. You can put your card in there and you can transact wherever Alipay is accepted with no changes to the merchant. That's just brilliant. This is where you brought in a card ecosystem and a wallet ecosystem talk to each other. That's in simple words interoperability. And wouldn't it be cool that somebody from Philippines using a Gcash app goes to the US, taps on a terminal and New York City Transit, and that works with no changes. I think that's interoperability which we are seeing, and that's where I'm very happy about, Asia is leading the edge in this digital payments, which is safe and secure.
So does it make sense to continue to cooperate with these competing platforms, or maybe at some point to become acquisitive?
Absolutely. I mean, the whole idea is to partner, because we will never win the game alone. We have to go together. So the wallets bring in the consumers, they bring in an amazing consumer experience. We bring in acceptance, which is 150 plus million locations around the world. We bring in trust, we bring in, dispute resolution when things go wrong. So the whole idea is to partner and basically leverage the strengths of what each of these entities bring together. And that's how we have grown over the last 60 years plus.
So you wouldn't buy a platform outright?
I mean, build, buy, partner is our strategy. So where it makes sense, we would build, whether we buy or whether we partner. Partnership seems to be one of the best strategies so far. So that's what we focus on. But when it makes sense, we have bought companies. We bought Recorded Future, which tracks fraud around the globe. We've done a corporate dev exercise with Corpay, which actually drives more business-to-business payments. So we look at where it makes sense to build, buy, or partner, and we adopt that strategy.
Sandeep, we'll leave it there. Thank you so much for making time to chat with me. Sandeep Malhotra, he is Executive VP of Core Payments for the APAC region at Mastercard. Thanks for listening to today's episode of the Bloomberg Daybreak Asia Edition podcast. Each weekday, we look at the stories shaping markets, finance, and geopolitics in the Asia Pacific. You can find us on Apple, Spotify, the Bloomberg Podcast YouTube channel, or anywhere else you listen. Join us again tomorrow for insight on the market moves from Hong Kong to Singapore and Australia. I'm Doug Krisner, and this is Bloomberg.